Everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. In these videos, we talk about the news that affects the markets and then put it in perspective using our Elliott Wave charts. In this video, we'll be talking about what we can learn from this week's release of the Small Business Optimism Index. You might be surprised how it has affected the markets historically. In addition, we'll be featuring the symbols that you see on your screen now. And remember, if there's a particular symbol you're interested in, you can click and go right on it using the chapters feature in the video. With that said, let's take a look at the charts. Hey, it's great to be back with you following our holiday break. And don't forget, if you like these videos, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. Thanks. We really appreciate it. All right, getting to what happened over the holiday break. A lot occurred. Before the holiday break, we were talking about a disqualified Elliott Wave pattern. We were waiting for the algorithm to relabel, and it has, showing that we are in a corrective pattern. In this case, it's a zigzag pattern. You can see clearly the bottom here, and when we look at the zigzag, that B-wave correction at 56%, right between 50 and 61.8, and that gives us a potential 100% extension on that C-wave up to around 436. Looking kind of bullish here in this pattern. Something interesting, in the intro I talked about the Small Business Optimism Index that was released. Let's take a look at that. This is from the NFIB. And when you look at it, you can say, okay, well, what does that tell you? Well, it's exactly what it says. It's a survey of small business owners and what they're looking for as far as the economy, business down the road. So it can be viewed as a contrarian indicator. If you take a look at it, you can see that it's bottomed out here around 2012, again around 2016. Look at that at 2020, and then where we are now. We are at a level down around exactly where we were in 2020 with COVID. Can you imagine that? So let's take a look at how that has worked historically with the markets. Again, remembering it's a contrarian indicator. So when sentiment is negative, you take a look for potential rallies. So here's a monthly chart of the S&P, and I've drawn arrows at those points where the Small Business Optimism Index bottomed. And so you can see we were here, and then what happened? We rallied from that 2012 low, and in 2016 a rally, and then of course you know what happened in 2020, a rally, and it's down to that level again. It's supportive of this potential zigzag moving to the upside. So you look at that as a bullish indicator, at least from a contrarian standpoint. All right, so let's take a look at some of the other things affecting the markets, and the interest rates. The 10-year that we always look at is down here testing this wave 4. Now you can see we're about to run out of time on this time and projection box, which means that we may be moving into a bit of a flat here rather than an acceleration to the upside on rates. That would be viewed, I think, is bullish. I would like to see it move into a flat, not break down significantly, because then you have to wonder, why are people buying bonds? Are they concerned? Is this recession going to be really bad and money's moving into bonds? That would be a negative. But if we just kind of stabilize here, I think that's a positive. And then if we look at the dollar, it's moving to the downside here. We talked about, I've mentioned numerous times, I'm a fan of a strong dollar, but not as strong as it got. And pulling back is a good thing. My only concern here is a little bit of the pace of the move to the downside. I don't really like these vertical moves. I'd like to see it just kind of creep down a little bit as we are going through, or we did in November and December. For me, personally, I like the dollar pulling back as long as we kind of stay in this area here in the 96 range, right through there. So if the dollar doesn't break below that, I think that's a good stable sign. It shows that there's confidence in the dollar. We have strength, but it's not so strong that it's hurting businesses with international ties from the exchange rate conversions. All right, taking a look at some of our other markets on the diamonds, we can see that we have relabeled here. We had already done that before the holidays, but you're going to see something really interesting when we look at the rest of the markets. And with that upward zigzag pattern in the SPY, it's not in a 5-wave impulse pattern, but they're both bullish patterns, so supportive of each other. Remember we talked about that dichotomy that we had, where before the holidays we had 3 different markets with 3 different Elliott wave patterns, and I mentioned that won't stay. When you get that kind of bifurcation type stuff, eventually eventually they come back in line and the markets are similar. Not exact, but similar, and that's where we are now. So we're getting some clarity here on looking forward. And so you can see this wave 4 right at the 50% level and a potential move higher there in the diamonds. Look at the Qs, a relabeling here as well. This was one that had a qualified downward 5-wave impulse pattern. That's been relabeled, and you can see the amazing amount of support that we have here at 260, and we're bouncing from that level. We look at the moving averages, not really that much overbought yet either, but we are at a little bit of resistance here. But if the Qs could break above 280, we could have something going here. We talked about how the Qs had underperformed. They'd been the worst performer before, and when the market does start to look ahead, does start to look at better times, that's where you're going to get the best bang for your buck. It was hurt the most on the way down. It's going to rally the fastest on the move back to the upside. I think it warrants taking a look at the Qs moving forward if indeed we do start to move into those bullish patterns. I'm curious as what you all think of the Qs. Leave a comment underneath the video. Do we break above 280 and we're off to the races, or is this going to act as resistance and we're going to come back down or even become range bound between these 260 and 280 level? Definite support and resistance there. So curious as what you think on where we go from here in the Qs. Looking at the Russell, kind of a vertical move here, almost too vertical for me, but we're getting up towards that 190 level. You know, I don't like it when things go straight up because then they tend to come back down. So I wish it wasn't quite so vertical. We are overbought on the IWM from the 10-day moving average, but that's small caps, and so that's a good sign there as well. Techs, small caps, those are all bullish signals moving forward in the markets, but we're heading up towards that 190 resistance. I don't think we break it on this move. We're just too overbought here, and if it did break 190 in the next couple of days, next couple of trading days next week, then I don't see how it would hold. It would fall back to the downside. And by the way, a quick reminder, the markets are closed on Monday for Martin Luther King Jr. Day. Will reopen on Tuesday. So overbought here. Maybe we get a little bit of a pullback to start next week. Trading, we'll see. But again, I would rather it not break 190 while it's overbought. Consolidate here a bit under 190, gather itself, and then maybe take off and move to the upside here. So looking at some of the other things that we like to look at, Bitcoin. Finally, something to talk about with Bitcoin. Look at this. I mean, it's amazing to me how little intraday movement there was. We talk about the launchpad effect with our subscribers, and we talked about this in Tuesday night's TradeFinder as well. And by the way, if you haven't attended a TradeFinder, why don't you sign up under this video and go to our website at ewotrader.com. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. Love to have you. Good to be talking about Bitcoin and the cryptos again with our folks on the Tuesday night TradeFinder. But breaking to the upside here, well, now we're already right here at 20,000. So quickly in 2 trading days, we're at resistance. You know what the deal is here. Can we break above 20,000, or is that going to be a little bit of a short-term resistance area for a little bit of a pullback? And then if we break above 20, then we have the same scenario that occurs at 24. So just as we step down in those 4,000 blocks on the way down, they're going to act as resistance on the way up. But pretty interesting here. Talking about Bitcoin, looking ahead, the halving process is estimated to happen around April of 2024, and there's been some charts that suggest that Bitcoin previously has bottomed about 11 or 12 months prior to that, so we're kind of starting to look towards that area of maybe Bitcoin has put in a bottom at this point in time. Some stocks of interest. Tesla, boy, has LA Wave nailed this. Look how we're just peppering that Wave 5 tap box here on the way down. We caught a quick trade for our subscribers here when it was oversold. Just a quick one-day trade on the bounce, but we're consolidating right here around 120. And one of the things that I look at here is how vertical we went to the downside. So we were kind of moving down in a pretty orderly 45-degree angle. But then when we got down to 160, we went kind of straight down. And so from that standpoint, I think we likely are going to, from this basing, come back up and test 160. And then we'll have to see where things go from there. But a bounce in a decent market, I think back up to 160 is what we're looking at with Tesla. JP Morgan came out with their earnings report and did pretty positive there, so nice move to the upside there. You can see open lower, but recovered that, closed on the highs of the day. Nice Elliott wave pattern here. The issue, though, is the Elliott wave pattern has done its thing. 38.2% wave 4 correction with a doji there. Boy, that was as classic as it gets. And now we're up at the 62% wave 5 extension, so that fib level. So the question becomes, will we move to an extended 5-wave target? In other words, extend towards the 100% level. We look at the DMIs, what we like to look at, and a little bit of a tick down on the ADX. Perhaps that's just because of the confusion with the open. Perhaps over the next couple of days it turns around. But you want to see that positive directional indicator move up and the negative move down. Otherwise, perhaps that 5-wave pattern has played itself out. So not really conducive of a move to the extended wave 5 level just yet. We'll see how that trades out in the early part of next week. And then Bed Bath & Beyond was all the rage yesterday. Lots of talk about this move to the upside here. Are we going to have another one of those big short covering rallies like we did back in those meme days? All that kind of stuff. And right back to the downside today. It is extremely heavily shorted. It's almost impossible to borrow the stock. So potential move to the upside just from a short squeeze is there, but you can see it didn't play out that way today. So moving back down. Remember, when you mess around in this space, there's a lot of risk there. So it looked like perhaps, and I think some people were looking for, could we get another one of these moves like we had in August? Well, not today, but it was pretty overbought from the 10-day moving average. We've corrected that. We are on top of the 50-day moving average. Again, these are just speculative trading positions that you look at here. I also wanted to take a look at gold. Nice bid in gold, and believe it or not, we're actually just a short-term overbought on gold. How long has it been since we said that? And getting a little bit vertical here. I'd love to see gold pull back to this 175 level, get back towards that 10-day moving average. You've heard me say it, no security in any time frame gets too far away from the 10-day moving average. And this vertical stuff, it looks a little bit like a blow off top kind of thing to me. So perhaps we come back down to 175, consolidate, tap that 10-day moving average, and then it looks like we have a pretty easy move up towards 185, and I say that because there's no resistance. You can see the move from 185 down was just kind of a orderly 45-degree angle, so there's no real resistance other than the fact that we're just a little bit overbought short term. Looking at oil, oil was interesting today because the level I've been looking at is 70. You can see we had finished with a wave 5 pattern here to the downside. The wave 5 did not extend beyond 100%, so when that occurs, you look for a corrective move back up towards the previous 4. So oil looks like it wants to try to challenge that 80 level. We're getting a bid here, and we'll be looking to see if we get some follow through to that move on Tuesday. Now, we are just a tiny bit overbought here with where we close from the 10-day moving average, so maybe it takes a day or two to rest, a little consolidation, and then make a run towards that 80 level. It looks very viable as far as a potential move there. So you're seeing the metals, oil, commodities starting to move, which is, again, a bullish signal. We'll take a look next week at copper because a lot of people look at that as a signal. It's moving as well. Some of our international markets, looking at Australia, nice move to the upside here. Great 5-wave pattern to the upside, but once again, little concern with the vertical nature of this move. Just kind of a little too vertical for me, and we're also a bit overbought from the 10-day moving average. So perhaps we need a little bit of some consolidation, perhaps a little bit of a pullback, and on top of that, we're right at the wave 3 high, which could act as resistance from the end of November, beginning of December. So it looks like just short term, a little bit overbought on the EWA and the Aussie market. We could even come all the way back down to 23. I doubt we come back down that far, but you could come back down and test that level. There's tons of support there, and it would still be a bullish setup. but I don't know that we make it that far, maybe just back to 23.5 or so, get closer to that 10-day moving average, and then turn and make a run towards that 25 level. Looks like that's in the cards for the EWA. Looking at Canada, also moving a bit vertically, but not quite as vertical as the EWA. This wave 4 here held on at the last bastion of fib support there at 78.6%, so just almost disqualified this pattern, but it did stay there. I talk about fingernails hanging on a cliff. That's about the way this wave 5 pattern set up. But again, getting a little bit vertical here. A tiny bit overbought, not quite as much as the EWA. So maybe we get a little bit of rest in the markets at the beginning of the week. We'll have to wait and see. It wouldn't have surprised me to see some rest today, but that didn't happen going into a holiday weekend. Tells you people aren't really concerned about significant bad news coming out over a holiday weekend. Again, that I think is another bullish signal. Looking at the INDA, and we have a nice zigzag pattern here, as you can see as well on the INDA. And so potential move up towards that 100% level perhaps, but a corrective move. We've done everything we're supposed to do. The wave 5 corrected right back to the previous 4, did that quickly, and then we've gone through this really big massive flat. So it looks like perhaps we're ending that flat and moving into another corrective pattern, which is a zigzag, but in this case, it's a bullish setup with a potential C wave extension all the way up towards 44. Looking pretty good there on the INDA. And then last but not least, looking at Germany, and you can see this move to the upside here in the German market, just kind of going vertical here. How long has it been since we've been talking about a bullish pattern out of the German market? But it is nice to see just right smack in the middle of that tap box, the wave 5 at a 50% extension. Perhaps we get a little bit of resistance there. And on top of that, you can see that we have some separation here from where we are with the wave 5 and the 10-day moving average. So some separation with this area here. I think a little bit of backing and filling is warranted for the EWG as well. Again, glad to be back with you. Look forward to talking to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.